Hello, and welcome to Money Mystery No More. Are you seeking to be rich, wealthy, or financially independent? Have you always wondered why the stock market creates so much money, so much wealth and opportunity? Let's talk about financial independence through stock market steadiness. This is an exciting conversation because it is possible and it is reality. The fact is, stocks have created a lot of, well-off people. If you want to get the most out of this video, listen in closely as we talk about how you can gain financial independence through stock market steadiness by keeping it simple. It's awesome, and remember, hit that subscribe button to keep getting the latest and greatest information. Okay, let's remove the mystery. Lots of people desire to have what they envision as financial independence. It's an elusive term, isn't it? Think about it. What does it really mean to you personally? It's a fair question because there are a lot of meanings depending on who you ask and what you read. Without muddling it up too much, let's say financial independence, having enough financial resources to live your desired life without working. While that 11-word explanation may seem quite simple, let's walk through it with some justification. While the reason and even the meaning is personal to you, to each individual, some truths will hold true regardless of who is pursuing financial independence. You must be honest about your current financial situation, understand your debts and assets, really know where you are strong and where you need to improve. An honest picture of both short-term and long-term is crucial. This means all debt, liabilities, assets, savings, income streams, investments, and so forth. Realize that this will almost always involve budgeting at some degree and investing to accelerate the building of wealth as you pursue financial independence. Practicing discipline and patience will reinforce your pursuit while maintaining a mindset of long-term thinking. Financial independence is structured on building wealth. This means building your wealth substantially to allow your expenses be handled without you having to actively work each day. As you save and invest large amounts of your income, perhaps as much as 50% or more, you need to find tools with high return rates, dividends, growth, and compound interest. Things like stocks, bonds, real estate, and trustworthy business investments. Those savings and investments must be diversified, involving a variety of financial instruments across various companies and industries. This is a smart money tactic and part of your risk management strategy while building your wealth. Financial independence is also structured on passive income. This is a form of money that you earn but are not working for it every day. Ongoing return on investments, monthly rents, dividends from stocks, subscriptions in a service you offer, and other revolving income streams all count. Finally, fiscal management. You will definitely practice some discipline over your incoming funds and outgoing expenses as you build wealth. Developing that mindset typically involves learning how to become rich or wealthy. It involves financial literacy. Watch my video, Financial Literacy Leads to You Being Rich, for more tools and insights. Essentially, you want to build options for your desired future to include freedoms in how you live each day, how you work and play. The financial security you develop will offer you options, and this will prove to be invaluable at different junctures through life. Let's switch gears to the stock market. How does this play into your future, you might be asking? How do you get your financial independence through stock market steadiness? First thing is to know what you're dealing with. The stock market is also known as the equity market or share market. It's all about transactions of shares. They are bought and sold through the market on a stock exchange such as the New York Stock Exchange, NASDAQ, or other exchange. In the United States, companies participating in an exchange are subject to the regulations and oversight of the SEC, also known as the Securities and Exchange Commission. It's lots of regulation with lots of reporting and transparency. Anyway, the purpose of the stock market is to allow transactions of shares. Those shares represent a claim, a portion of ownership on the business. The portion of ownership is bought and then owned by an investor, or the portion of ownership is sold and then owned by another investor. The shares of ownership typically involve publicly traded companies. Those shares bought may be fractional shares, a little piece of ownership, which allows easier market access to any person. The shares represent the company's value and performance as demonstrated by the trade volume and price each market session. The stock market is big and not just confined to the US stock exchanges mentioned earlier. It's a very broad marketplace. Businesses will often use the stock market to raise capital for startups, to grow existing business, to consolidate, or to even pay off debt. Each share offered by a company is a piece of that company's value. They may offer a small amount of shares to limit public ownership, or they may issue millions of shares, which sort of waters down the amount of the company owned by an investor. A single share might be a tiny fraction of the overall ownership. Additionally, the stock market also offers signals of strength or weakness of a company, an industry, or perhaps even the general economy overall. Interested investors and analysts scour the stock market data for insights. Companies participating in an exchange are public, so their shares are available to everyone, rich and poor. Again, any person may buy shares, whether it's a small amount or an enormous amount. Shares can be purchased over time as well. All of this allows financial independence through stock market steadiness because it can be affordable and does not need to be done all at once. Another added benefit of owning shares is dividends and share price growth. Plus, you may get to vote on company matters as a share owner. Today, the stock market is watched to gauge how the economy is doing, but many use the stock market as a means to create wealth for themselves. If not directly trading stocks in the market, many Americans use the stock market as a primary tool for building their retirement wealth through IRAs, mutual funds, and 401ks. And it's all walks of life involved with the stock market. It has no discrimination. It just commands some discipline and some long-term thinking. Not only is a slow and steady approach helpful, it provides time to develop necessary financial literacy. In turn, that will offer a greater sense of financial independence, reduced stress, and an overall general well-being financially. For the average person just running some high-yield savings account, getting involved with the stock market might be worth it. Admittedly, savings rates with compound interest can become rewarding over time, but it's usually not enough to be financially independent, even if regular contributions are being made. Then anyone thinking about retirement, approaching it, or already in it may opt for the stock market, especially if they don't already have strong portfolios tied to the market. They might only have Social Security and may benefit from the stock market if able. Roughly 40% of people do rely on Social Security for more than half of their income. Shockingly, the typical retired person is getting a mere $18.75 a month from Social Security. That's pretty sad considering many paid that Social Security tax for 35 to 45 years, expecting a safety net in the end. Then there's a group of younger people pursuing FIRE who are seriously involved with the stock market. They are cashing in on FIRE, also known as Financial Independence Retire Early. FIRE participants invest fast and furious in a short period of time to capture the opportunity of financial independence much earlier in their lives. The movement takes a serious focus on investing and controlled spending at an early age. With FIRE, your income is directed heavily to investments, typically 50% or more, while your spending is severely controlled and limited. By investing heavily so young, your money accelerates while also leveraging time, money, and compounding to basically accelerate or build your investments so big that you just live off of the returns. Whether an average person, a pending retiree, an actual retiree, a Social Security dependent, or a FIRE participant, obtaining financial independence through stock market steadiness is the key, and it is possible. Any financial expert will tell you that stocks are commonly used to build long-term wealth. However, you must learn and embrace some common practices such as the following 5. 1. Do not constantly buy and sell. Instead, buy and hold for long periods of time. 2. Diversify, diversify, diversify. Do not put all your eggs into one basket. Spread your investing across lots of investment tools like real estate, bonds, and especially funds, which encompass hundreds of company shares, stocks, instead of just one. 3. Buy stocks that pay dividends. Then reinvest all dividends because historically it's shown dividends are responsible for a big chunk of the stock market's historic growth. From 1921 through 2021, when dividends were reinvested, the S&P 500 return was nearly 11% versus a 6.7% where dividends were not reinvested. 4. Participate in company-sponsored and matched retirement accounts like a 401k so you can take full advantage of free money. And 5. Open a Roth IRA and fully fund it each year for some wonderful tax advantages. While these practices do not guarantee your financial independence, they are time-tested and have proven to help in downturns, economic pitfalls, and even during a stock market crash. Those are nasty, unexpected, abrupt, and sudden drops in the prices of stocks and stock value. The crash is shocking in nature and tends to cause panic. That panic often leads to a negative impact on society as a whole and causes economic hardships and downturn. Watch my video, Market Crash and the Economics Impact, to grasp why the 5 practices just discussed may help you on the path toward financial independence through stock market steadiness. Between that and several other Money Mystery No More videos, you will learn that another key to financial independence is the financial literacy mentioned earlier. Read a lot, listen to a lot of audio content, sign up for newsletters, and speak with some financial pros. Consider adding these to your must-read list. Rich Dad Poor Dad by Robert Kiyosaki. If You Can, How Millennials Can Get Rich Slowly, a free 15-page online PDF by William Bernstein. The Compound Effect by Darren Hardy. Money Master the Game, 7 Simple Steps to Financial Freedom by Tony Robbins. And I Will Teach You to Be Rich by Ramit Sethi. Even with all that reading and learning, you must think long term. Allow the stock market to prove that steadiness works. Be steady, period. Long term is the name of the game because time has always weighed in for the win, for gains, over the long haul. There will be little dips, bumps, and detours along the journey, but fortunately, history clearly shows that the market wins over time. Your main takeaway is to learn, engage the market, and be patient. You can obtain financial independence. Wherever your journey takes you, financial independence through stock market steadiness can work for you by keeping it simple. Remember, hit that subscribe button and turn on notifications so you keep getting the latest and greatest information from Money Mystery No More. I'll see you in the next video.